Welcome back and welcome to Homes Today. This is a proud presentation of Audrey Forche, who is a famous realtor at Remax Realty. She's also an advisor. In each episode, she brings in a popular guest associated with the buying and selling of homes. Her segments are informative and keeps you abreast of the do's and don'ts in the real estate market. Today, Audrey invited Paul to speak to us about 203K loans. Have you heard the latest on 203K loans? If not, please stay tuned to the following conversation.
Hello friends, thank you for joining us again today. My name is Audrey Forche and I'm a Remax agent in Montgomery County, Maryland. And today we have our friend Paul Pykosh with us from Embrace Home Loans. And we started talking about construction and rehab loans on one of our last episodes. And I thought it would be interesting to kind of get into what we call a 203K loan, which is a type of renovation loan, but there's a lot of aspects to it. And I think that you would like to hear that today. So thanks, Paul, for coming back and being with me again today. So the 203K loan is a rehab loan, right? But it's done under, is it HUD? It's an FHA loan, is that right?
Yes, the 203K is an FHA loan,
right?
Which is part of HUD, and they set the rules and parameters and guidelines for the program.
Okay.
The advantage of an FHA is that it's more liberal guidelines. The credit scores don't have to be as high, less down payment. Down payment on these renovation loans for the 203K is 3.5% only.
Okay, so that's great for, especially if you're like a first-time home buyer or you don't have a lot of cash in the bank. So when we're writing, us agents, when we're writing the contract, we write it as a regular FHA loan, but we denote that it's a 203K loan that we're doing on the contract. Is that correct?
Correct. The contract should state that it's an FHA 203K.
Okay.
And the loan amount in the financing section is going to be different than it would normally because the down payment is not based on the sale price. The down payment on a 203K loan is based on the acquisition cost.
Okay.
The acquisition cost is the sale price plus the cost of the renovation escrow.
Okay.
And that total is what we use to take the down payment from.
Okay.
So when I help a real estate agent write a contract, I'll give them those numbers once we determine a little bit more in detail of how much the renovations are going to cost.
Okay. So my understanding of a 203K loan is that is there a cap on the amount that the borrower can borrow to fix up the house? Is there, for some reason I think it's $40,000 is the maximum, or is that different now?
It's a little bit different. I'll explain. The FHA 203K, there's two variances of this program.
Okay.
One is called the 203K Limited, which used to be called Streamline. HUD changed the name of it to Limited.
Okay.
And then there's the 203K Standard, which is the full 203K.
Okay.
The difference in dollar amount is $35,000. And I'll explain the difference in a second. So when the renovation costs are less than $30,000, and I say $30,000 because there's hard costs and there's soft costs in a renovation loan.
Okay.
The hard cost is the cost of repairs, but that's not all that goes into the renovation escrow account, because we want to account for things like the contingency reserve, title update fees, inspection fees, permit fees. All those can be included in the loan amount and financed from the borrower, so they don't have to pay cash for these things.
I see.
So, but the streamline cutoff is $35,000, but the work shouldn't be more than $30,000 because of these soft costs that get added in.
All right, understood.
And so those programs, the streamline or the limited 203K, we're not required to have a 203K consultant involved. That's the main difference. Also, a lender can offer the contractor half of the renovation costs up front at closing, as opposed to the standard program where there's no money up front. So
it all has to come after the closing of the property, is that correct?
Correct.
Okay, All right.
Maybe you want me to run through the process in general?
Yeah,
to-
that
to-
would
to
be that
explain?
would be wonderful. Sure.
So there's some what we call best practices in the industry. I've been doing these renovation loans since Moby Dick was a minnow. So I've seen a few
Yeah.
of these over time.
Yeah.
So my experience is kind of telling me where I should go with this and how I can make it better each time
Okay.
down the road. So I have found that one of the trickiest parts of a renovation loan is finding out as early as possible what needs to be done to the property.
Okay.
So someone comes to you and says they want to buy this particular home and they know it needs some work. So what I like to do is have a 2 or 3K consultant do what we call as a feasibility study.
Okay.
Early on, before they even write the offer.
Okay.
I prefer to do it that way.
And who's the 203K, or who's the consultant? Where does that person come from? The mortgage company, from HUD? Where does that person come from?
Well, they're approved and vetted from HUD.
Okay.
Each 2 or 3K consultant has to send their credentials and they get approved from HUD to do this
Okay.
role. And they're independent. They're not working for the borrower, they're not working for us, they're not working for the contractor. They're really the eyes and ears of FHA, because unfortunately there was a lot of fraud with this program long ago.
Oh, really?
And the consultants have really been vetted to make sure that the
They keep
program
that at bay, yeah.
is done the way it's supposed to go.
Okay, well, good.
So I get them involved early, even if it's not going to be necessary that they do a full work write-up on one of these loans, but they get to see the property and talk to the borrower and the realtor up front to say, okay, let's visit the house. Let's see if it's even feasible to do what you're thinking.
Yeah, okay.
Because there is the money pit. Everybody wants to watch
Yeah.
HGTV and
Yeah.
they see all these things that
Yes.
you can do, but they don't really cover how to finance this stuff.
Yeah, you're right.
So they go out to the property and they sit down and say, okay, these things have to be done. There's mold in the basement, you have a roof that has a leak,
Yes.
X, Y, and Z are issues. And then they'll ask the borrower, what else do you want to have done? You want to update that avocado kitchen from the 70s, and et cetera, et cetera. And they know up front what can and can't be done in the program.
Okay.
Rather than wait for the appraiser or down the road,
Yes.
let's not kick the can down the road. Let's figure out up front
Right.
what we're dealing with. And if we set that stage up front, we'll know how much it's going to cost, what are the work or items, and then if the borrower wants to pursue this or not.
Okay.
Because if it is a money pit, they want to bail and they don't want to write a
Yeah,
contract
don't
and
waste
want
the
everybody's
time.
time. So, but if it is feasible and if it looks like it's something that they're interested in doing, then they can go ahead and write an offer with some contingencies in there.
Okay.
In addition to a home inspection contingency, I recommend writing the 2 or 3K consultant report contingency as well.
Okay.
And that way you're covered with a home inspection and a little bit of time to do the full write-up on these contracts.
How long does that usually take, that feasibility study, do you think,
Well,
approximately?
one of the tips that I'll share is
Mm-hmm.
I like to use the consultants that also have home inspection experience. And,
Okay.
and sometimes you can have both of one company do both.
Okay.
So you save in cost and you save in time. You can do the home inspection and the consultant,
Oh,
the
okay.
feasibility study up front.
Oh, very good.
So that's another way to save some time in these, because the industry there's a lot of resistance towards doing these loans. Because they take longer, there's more issues, et cetera. But if I figured out ways to cut time and make
Yeah.
it more efficient and better,
Definitely.
then it works better for everybody.
Definitely.
So we determine with the consultant up front how much this is going to cost. And let's say the contract's written, we have the inspections done, everything passes the way it should go. And then we start the process with looking for a contractor. I prefer that we have a contractor early, but if not, then we still have some time.
And do they have to have certain qualifications to be the contractor on the project, or does that matter?
Yes, it does matter. It's a
Okay.
great question.
Okay.
Because we don't approve, per se, a contractor, but
Mm-hmm.
we vet them. We want to make sure that they have license, proper insurance, some references.
Okay.
We want to make sure that they're not going to be going out of business in 2
Right.
weeks, and then we're all left holding the bag.
Yeah.
So we do some vetting of the contractors to make sure everything's going to be okay.
Okay.
But the borrower technically chooses the contractor.
Okay.
But we vet them. Now, another reason to use the feasibility study is that consultant will give 2 reports. One will list all the work items and how much they cost, and then another separate report will just list all the work items with the blank costs. and the borrower can use that to shop contractors.
Oh, good.
So every contractor's bidding on the same exact job.
Oh, good.
You've seen contractors
Yeah.
come in and they're all,
Yeah.
it's hard to figure out what they're doing.
Yeah.
So this keeps everybody on the same page, and
Okay.
it helps them shop contractors a little bit better.
Okay. And so on a 203K, they get their money at the closing to do the work, right? Now let me ask you this. What happens if you loan the money to somebody for a 203K and they don't do the work? Has that ever happened, or could that happen?
Well, that's where the fraud comes in.
Oh.
So we don't allow.
I don't even think that way. I just crossed my mind.
Yeah, long ago there was a lot of problems with this, and that's why HUD has all these checks and balances now.
I see.
So if the work's not done after closing, the funds aren't going to be cut for that.
Well, good for them for figuring that out.
Yeah,
Good for them.
it's important that for everybody's sake and
Of
for
course.
the program's sake. It's a good program. It's underutilized, but when it's used right, it solves a lot of problems, and it's great for the buyer.
Of course. And so, so the appraisal is going to be a big part of this because you're giving the money. Does it have to appraise for the value that it will be fixed up, or does it have to appraise for the as-is condition? Where does the appraisal contingency come in on those?
Another great question. So the process is, let's say that we've gone through the contractor vetting phase, we have the consultant report all lined up, and now we've done all the W-2s, pay stubs,
Right.
and gotten all the borrower's credit information. And then we have the appraisal now.
Okay.
The appraisal is done on the completed value of the property,
Okay.
not the as-is value.
Okay.
Because why else? That's the only way to justify lending more than the sale price.
That makes sense.
So we're gonna give somebody one loan for the acquisition to buy the house and to rehab it in one loan, and the loan amount's usually going to be higher than the sale price, and we justify that by the improved value appraisal. The appraiser is going to take the consultant's report and the contractor bid and pretend that all these things are done and look for comps as if it was completed.
Okay.
And that's how we justify the value.
Well, can an investor use this loan, or is this only for owner occupants?
Well, that's a great question. It used to be that the 203K did allow for investors back when Moby Dick was still a minnow.
Yeah.
Back in the 90s, they allowed for that. HUD has gotten rid of renovation loans for investors.
Okay.
However, Fannie Mae has stepped in, and they have a program called the Homestyle Program.
Okay.
Fannie Mae allows, under the Homestyle Program, an investor to buy and renovate also.
Okay.
And the minimum down payment on that is 15% down. They can put down more if they want.
That's actually pretty good for an investor. Usually on investor loans are 20-25% down, aren't they, a lot of times?
It's a great option as opposed to putting their own cash. Some investors want to do more than one of these, and they want to save on their own their cash outlay. So this is one program that helps with that.
And they'll loan the money for the renovations for the investors.
Yeah, it's the same thing as the 203K in process, in that
Right.
we go ahead and get somebody approved, do the appraisal, we go to underwriting, and we close. And at closing, we have one loan amount at closing with a certain portion, the escrow, the renovation escrow portion set aside.
Okay.
That's going to be used for a series of draws. So no work has to be done prior to closing. All work's done post-closing, and the work is done in a series of draws from the money that's set aside in the renovation escrow account.
And so on these loan programs, are they competitive interest rates, or are they higher interest rates usually?
Another great question. It used to be that the interest rate for the 203K and the Homestyle was great. It used to be about 2% higher in rate. That was long ago.
Okay.
It's not that way anymore.
Okay.
We're doing these for maybe 1/4% to maybe 0.5% higher than the regular Fannie Mae, Freddie Mac, FHA loans.
For the
whole
everybody.
loan, for the whole loan, yeah.
Is that for owner occupants or investors?
Well, for the same program comparatively.
Okay.
In other words, so if there's a Fannie Mae investor loan,
Okay.
and versus the Homestyle investor loan, it's going to be 1/4 to 0.5% higher.
Okay.
There's already going to be overlays added for a regular Fannie Mae investor loan, but the renovation investor loan is going to be only 1/4% higher than the regular investor.
All right.
Make sense?
Yeah, that's awesome. So you can't use this kind of a loan. These are only purchase loans, right? They're renovation loans, a totally different animal. Like if I own my house and let's say I want to redo my kitchen or something, this is not the kind of loan for that. Is that right?
It may be.
Oh, really?
We can do 2 or 3K in home style for a refinance.
Okay.
I'm closing one right now for an investor refinance renovation.
Oh, wow.
So they are there for it, but sometimes you want to do a cash out refinance versus a renovation loan. The reason why, if you have a lot of equity in your home, you may just want to increase your loan amount and do a cash out refinance to pay for those.
It's cheaper to do it.
It's cheaper.
Oh, okay.
So I do all types of loans, and what a good lender will do is analyze the situation and recommend what's best for the client.
Okay.
Sometimes it's a cash out, sometimes it's a renovation loan. It depends on equity usually.
Well, good. That's awesome. That's great information. I thank you, Paul, for coming back and seeing me again today. We thank you for joining us, and we hope that this information was helpful to you. Thank you.